So welcome back to Chapter 3. We're going to continue with Objective 2. This is really step 2 in that accounting cycle process because now we're going to post the information from the journal to the ledger. So posting again is we're going to take the information that is in the journal, so those journal entries that we've just done that you've got written down in your notes, and we're going to post these to the ledger, to the T accounts. And those T accounts we learned back in Chapter 2 we're going to start using now. So you may want to grab a separate sheet of paper that you can kind of attach to your notes because we're going to go through and post all of those journal entries that we just did to the various T accounts. So you can use just a basic T account or you can use what's called a 4-column account. So if we're looking at this, this is just an example one for accounts payable. The basic T account, I'm just going to kind of draw on top of here, is really just these columns right here. And remember, the left side of the T account is the debit side and the right side is the credit side. So this is really your basic T account. And we would write just right up here on top of the T accounts payable. So the fancier, like the 4-column account, is the exact same thing, but notice it has a separate set of columns for the balance so that every time we post something, we calculate what the new balance is in the account. So a lot of times if we're just doing this kind of in our notes on our own, we'll just draw the little T accounts here. We won't calculate a new balance every time. We may only calculate a new balance like at the end. And then but sometimes in my accounting lab, when you're posting, it'll have you do it to a 4-column account where you're just calculating a new balance every time. For those of you who are old enough like me to have a written checkbook and you had that little checkbook register that you recorded all the checks that you wrote in, this should look very familiar, except instead of calling it debit and credit, we called it deposits and checks, right? But we had 2 columns that we wrote the amount of the deposit or the check, and then we had a column over there to recalculate the new balance. So it's basically the same thing. So the way that we do this, and so here we have our first journal entry that we did in the first video in Learning Objective 1, where we debited cash and we credited Rob Sinclair Capital. So the first thing we do is we're going to look at our debit account, cash. I'm going to go down here to the debit ledger page. The ledger, just think of the ledger as a giant book that has all of the T accounts in it, okay? And so I'm going to put the date, which was May 1st. Notice this is the cash account. I'm going to go over here now, the post-ref column. The post-ref column is where I'm going to put what page of the journal that the original entry is recorded on. So this is recorded on page 1 of the general journal. So our post-ref is GJ for general journal 1. Then in the debit column, I put 10,000. And then I calculate my new balance, which is just 10,000 because remember Rob had just opened his business, so everything had a zero balance. We're just putting the balance in. Now I go back to my journal, and in the PR column in the journal, which we skipped in the first video, that PR stands for post-ref, and I put the account number of the account that I just posted this entry to. So cash is account number 111, so I put that in 111. So now I'm going to go to my second account. I'm going to go to Rob Sinclair Capital. I'm going to go down here to the capital account. I'm going to put the date. I'm going to put the post-ref GJ1 for page 1 of the general journal. And in the credit column, I'll put 10,000. I'll calculate my new balance of 10,000. And then I'll put the account number up here in the post-ref column of the general journal. Now, again, if you're not using this 4-column journal, the way that we would do this in just basic T accounts, which is the way you may just want to write it in your notes, is you would just create a T account for cash. And you may want to put the account number 111. And then over here, I would, on the debit side, put the date. So May 1, and I would plug in $10,000. Now, make your cash T account big because remember we did lots of things with cash and we're going to keep adding to the same T account. And so then I may want a slightly smaller T account down here that I would call Rob Sinclair Capital. And on the credit side, I'm going to put the date, and I'm going to plug in 10,000. Oh, and I may want to put my account number here, which I believe is 311. And I'm going to plug in 10,000. So this is how I would post this to just a basic T account. And then if you're using the 4-column, obviously the only extra step is that post ref and then the balance columns. So here's all the journal entries that we did in the first video. And what I would encourage you to do is pause the video now, post these to your T accounts on that separate sheet of paper, draw out the T accounts, post these to those practice T accounts that you're making, and then come check your answer. Now, obviously the answers are done in the 4-column approach, but if you've practiced them on the T accounts, I think you'll be fine. And most of the time, again, we're going to just use those basic T accounts, simplified T accounts to post things to in this class, kind of as practice on the side. So go ahead and post those, then come back and start the video again. So again, here's page 2 of the journal. Once you get all of page 1 posted, make sure you post page 2 also. And then here's what your T accounts, your ledger accounts should look like afterwards. So your cash ledger account, when you get through with it, when you've posted all of those entries, should have a balance of 6,155. And your accounts receivable, which should only have one entry to it, should just have a balance of 5,000. So remember how we did the T account balances in chapter 2. I'm just going to draw the cash one over here for a quick example. Now I'm going to just be quick, very quick about this, so I'm not going to put the dates on all of these, but I debited cash for 10,000, and then I've credited cash for 1,000, and I've credited cash for 1,200, and I've debited cash for 3,000, and I've credited cash for 650, and another credit for 625, and another credit for 650, and then I have a credit of 2,500, and lastly a credit of 220. So remember, then I would draw my line here, and I would foot these accounts, which you could do a couple of ways. You could just total up the balances here and write them out like 13,000, right here, and then total these up and write that out. Or you could, the way kind of that I prefer to foot things is to write it real small over here kind of to the side. So maybe I would write 13,000, and then I'm going to need to real quickly add these up. So if I added it correctly, my credits total 6845, and so then I'll take the difference, so 13,000 minus 6845, that gives me a balance of 6155, and because the debit side is the largest side, I'm going to put the balance over here, 6155. So here's your other ledger accounts, and I realize these are pretty small and a little hard to read. You can look in your book and double check. Most of our accounts only had one entry to them, so there really wasn't a whole lot to add. The one that I want to point out was accounts payable. So again, I'm going to draw my accounts payable T account over here just real quickly. Remember, we originally credited it for $5,000. That was when we bought that computer equipment. And then we credited it for another $600. That was when we bought the computer supplies. And then remember, we debited accounts payable for $2,500 when we paid off half of what we owed for the computer equipment. So if I total this up here, again, I can foot these accounts. So this, my credits total 5,600, my debits total 2,500. So the difference in those two accounts is 3,100. And that would go on the credit side because that side is the largest side. And so again, notice that we only had two entries to office salaries expense. And since they were both on the same side, I just add those, and that gives me 1,300. Now, again, that cross-referencing, that just helps us so that we'll always know, hey, have I posted this journal entry or not? And if I did, what accounts did I post it to? Or if I'm looking in the T accounts, I can know exactly what page of the general journal that I can go back to and find that original entry. This is especially helpful if we've made a mistake somewhere and we have to go in and fix it. Now we can know exactly what page do I need to go to find this? What account number do I need to go to find this so I can fix it?